You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 2/3/21. Well, markets, maybe they're going to calm down a little bit. Maybe not. Maybe we're just getting started, and maybe we're in for a lot more wilder ride than even what we've seen thus far. What do you think? Do you think this fun is just getting started? Send us an email. Let us know your thoughts. KL@kerrylutz.com. That's the email address. We'll look forward to hearing from you. And now we're going to hear from Jim Welsh of Macro Tides. Find him at macrotides.com. Jim, welcome back. So quite a week. Kind of the Empire Strikes Back. The Davids attack Goliath, and Goliath takes out the heavy boulders and starts rolling them down the hill at the army of Davids. You think?
No, I mean, that's the narrative that a number of members of Congress wanted to push. The media wants to push that. But the reality is that if you're running an investment firm and you have a tremendous increase in number of accounts, and those people then increase their exposure to the equity market and the volatility, as you know, in the stocks that they were focusing on, the regulatory bodies calculate a firm's exposure. They have an algorithm that calculates, okay, these are the kind of stocks that your clients are, putting your firm also at risk, and you need to come up with some capital. So, that's the real story behind what went on last week, as opposed to, gee whiz, the little guy finally was starting to make some money, and the big guys put the screws to them. I mean, anybody who's willing to pay over $400 for a stock like Gamestop, whose revenues have been declining for years and earnings are negative, I'm sorry, is an idiot. It is what it is, and to compare that what this mob in the Reddit chat rooms are doing something noble, because they're trying to, run over hedge funds. To me, again, is media just off the rails? Because what's driving hedge funds is greed. What's driving these people in the chat rooms is greed. And, to suggest that one person's greed is better than another, to me, is a little silly.
I'll go along with that greed is universal, and greed is, whether it's good or bad, we don't need to make that decision. However, when greed results in a short position that is larger than the actual number of shares that the company has issued, right, something is wrong here. And let's go take it a step further. When there's this thing called naked shorting, all right, where the hedge funds go in there and they actually short the company more shares than they have outstanding, all right, which when you have 140% short interest, that means 40% more shares are out there than the company ever issued. Right. Something is wrong here. Now I'm going to go back to something that Elon Musk talked about in a recent interview with Sandy Munro, where he goes back to the history of short selling, at least in the United States, where they were constantly delivering shares, certificates back and forth. So there was risk involved. So they shorted. Do we need short selling in today's markets? I know about the liquidity issue. I also know that every great bull market rally starts with a short squeeze. Is it serving a valid function at this point, or is it just enriching the likes of Citadel and the what I would call the high frequency fraud traders?
Yeah, well, I think the points of having a short position greater than the float, is valid, and I think maybe what comes of this whole experience is that the regulators take a look and hopefully take some steps to minimize those kinds of abuses. I have, I'm not, standing to protect any hedge funds and so forth. But I just was objecting to the narrative that it was David versus Goliath. And it's kind of like, no, that's an oversimplification. There are some points to be made here, and you made one of them that need to be addressed. And I think they will be addressed. I will also point out that short selling firms do a lot of research. And so WorldCom, Enron, the large banks on Wall Street that were processing and creating an awful lot of paper prior to the housing bubble, contributing to it, and then ultimately to the final, the financial crisis. The short selling firms were the ones that were doing the heavy duty research that uncovered some of these abuses that were taking place within individual companies and in mass. So they do serve a function other than beyond just liquidity, but that doesn't mean that they should have carte blanche, to the point that you raised, Kerry. So, hopefully,
which they have,
they have, and front running and all that kind of stuff. So to me, again, it's kind of like, okay, let's everybody take a deep breath. Let's be objective in terms of reviewing, make changes that are necessary to kind of level the playing field necessary. But I do think short sellers have a valid point in terms of analyzing the valuation of some companies. And if those valuations are out of whack with really what's going on in the individual company, to me, to outlaw short selling, I think is, a step too far. But, again, when you have a mob deciding that, okay, we're going to target various companies because there is such a high short interest, there's something about that doesn't sound all that gallant to me either. It's a spade. And, again, when I heard all the comments, AOC and Maxine Waters, even Ted Cruz agreeing with AOC and a couple of these other Congress people, and it's kind of like, oh yeah, they're rallying for their little guy. And my comment in my Monday weekly technical review, well, when these stocks lose 75% of the value, you won't hear a peep out of these folks.
Yeah.
And, they have in fact,
Crickets.
dropped by that much. And now they're on to whatever else it is. But they got their splash, and Elizabeth Warren will have her field day and all the rest of it. So, I just object to the oversimplification sometimes that the media does on issues. And as a result, they're not balanced. I mean, it's one thing to say David and Goliath, but it's another thing to completely omit that, there are regulatory bodies who, basically tell firms what kind of capital base that they need and are required to keep. And so the very people in Congress who were, making us think about this typically are the people who most favor regulation. And in this case, it was the regulators who kind of came down and said, Robinhood, you need to come up with X amount of more money. And you need to control the exposure and the risk that your clients are taking that are putting risk on you, and then the backstop for all investment firms. So I just want to, tell the whole story as opposed to, gee, let's have a headline.
Agreed. Oh, totally agree with you. This story is much more complex than the media would have you believe. There were collateral issues. Obviously, there was a number of brokerage houses whose viability was threatened by the whole thing. And people don't understand. And I'll be honest with you, I don't fully understand it either. But I know that brokerage houses have to put out collateral when they hit certain levels. Look, without these brokerage houses, without these broker dealers, they couldn't naked short. The only one that can naked short is a broker dealer. So let's look at that, because they've been doing this for decades now. It's time for it to stop. You shouldn't be able to short more shares than are outstanding for a stock. The other thing is, if you look, and I don't want to get into the metal thing and all that quite yet, but when you look at ETFs, there's a very reasonable debate about whether they should be allowed to be shorted or not. Like the shorting, naked shorting does allow for manipulation, but they don't like it when it's turned back on them and it turns into a short squeeze, which really it's a counterbalance to the naked shorting and the abusive shorting that we see, because the hedge funds aren't just happy to take their short position. We did our research, Jim. This company sucks. They're worth nothing, and they're trading for $100. Man, that we can't lose this. They then often take the affirmative step of ramping up the PR machine and deliberately releasing misleading, often misleading, but definitely biased research on the market to basically talk their book. And that's something that's really questionable as well.
Yeah. No, again, hopefully something good comes from this, as opposed to just, political agendas, that people look at it objectively. There are abuses. Things need to be changed in some respects, and those changes hopefully are made. And the net result is that the market is a better functioning, beast, if you will, and fairer as a result of whatever changes are made.
And that should be the goal, to cut through the hype and to say, all right, we got problems here. You got a problem, Lucy. Let's fix it now, and in the furtherance, make the markets fairer, and more transparent. You just can't allow shorting of more shares, because that just reeks of fraud. Yeah. Even if it's legal, it smells like fraud, doesn't it?
What's ironic here, Kerry, is very often, the thing that build up, the abuses that start out small and get bigger and bigger as a bull market progresses, really only get uncovered and changed more often than not during the subsequent bear market, where people look back and say, oh, okay, these are the abuses that contributed to this 40% decline that we're experiencing. And that's just the nature of bull markets over time. People look the other way. Everybody's making money. What might be questionable is, kind of dismissed. But the next bear market, all of a sudden, it's kind of like we look under the hood and we see that, oh, wait a second here. These were some of the things that were being done that really weren't appropriate and maybe potentially not even legal.
It gets exposed. All the misdeeds that took place, and then they become retroactively illegal a lot of times, which isn't always fair. Hey, the other thing is that we have this legislative regulatory overreaction, like Sarbanes-Oxley, which greatly damaged the U.S. economy. It's still damaging it to this day. Nobody has been able to get rid of the monster, and yet it goes on and on and on.
Don't just survive. Thrive. The Financial Survival Network.
Deux Copper Mining is a premier, near-term, high-grade copper and gold redevelopment opportunity with tremendous exploration potential only 14 kilometers from the town of Chibougamau in mine-friendly Quebec. Deux Copper is debt-free and owns a 2,700-ton-per-day mill with an 8 million-ton tailings facility ready to be used. There is already power to site, and it is accessible by paved highway and rail. Deux Copper aims to produce a profitable hub-and-spoke operation of over 100,000 gold equivalent ounces per year, or over 60 million pounds of copper equivalent by 2024. Because of the existing infrastructure and location, a low capex is anticipated to recommence production. Deux Copper trades under DCMC in Toronto and under DRCMF on the OTC. To learn more, go to DeuxCopper.com. That's DeuxCopper.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, I gave the opportunity for a bunch of politicians to give some speeches about how they were really cracking down on corporate malfeasance and so forth. And sometimes the cure is almost as bad, or there's always unintended consequences. I mean, that to me, I think I've gradually, as I've gotten older, is that the best intentions and you come up with a regulation, invariably there are going to be negative unintended consequences. It's a question of, is the ratio 5-1 in favor of whatever you did, or 2-1 in favor of what you did, or is it a 50-50 split? But I think a lot of people who, pass laws and stuff don't have as much respect for that process of there are unintended consequences. It's like, the $15 minimum wage. My take is, hey, it ought to be based on the cost of living in the cities that people live, because $15 an hour in New York and LA, sorry, that isn't probably going to help. And I'm talking about addressing the working poor. People who are working hard, working 40 hours a week, and they can still barely, get the rent, pay the food, save a few bucks, get their kids into schools and all the rest of that. Whereas in Mississippi, a $15 an hour wage is going to put a lot of small businesses out of business, and you're going to lose jobs.
I can give you examples even closer than that, but the minimum wage is proven over time to cost jobs of the people who can least afford it. Now, for instance, I live in Palm Beach County. So you have the city or the town of Palm Beach, the island there, one of the wealthiest enclaves on the planet. And there, a $15 minimum wage is just like chump change. You can't even get half your Bentley washed for that. But then we go to the other side of the county to an agricultural city called Belle Glade, which at one time was the murder capital of Florida. And there, $15 minimum wage, man, all the fast food places close up because they can't afford to pay it.
Well, or what they do is they get the machines so that people walk in. They don't talk to a person. They just punch in what they need to do. And more people are being trained. And the other aspect is that, somebody who's 16 or 17 getting their first job, that first job is really critical because people learn lifelong skills in terms of showing up on time, being able to follow instructions, interacting potentially with the public, and then also getting the reward and satisfaction of collecting a paycheck. So if you're going to pay somebody who's 16 the same amount of money as somebody who's 23 who has a number of years of experience, the reality is the 16-year-old doesn't get hired. So to me, the other thing is, besides adjusting the minimum wage based on the cost of living in various cities, the other thing is you'd have a second tier for those first-time workers so they can get that first-time job, get the experience that they need. So then, a year or two later, they're stepping up into a bigger job. But all that is too thoughtful of analysis and common sense, as opposed to somebody has a placard that says $15 an hour and Congress is going to go ahead and just bull run it. And that's the problem, I think, today is that, we have issues and problems that need to be addressed. But if we really want to improve a lot of people's situation, we got to do it thoughtfully in order to minimize the negative unintended consequences. So my point would be is like, hey, the minimum wage in New York and LA might be 18 and it might only be 12 in Mississippi. And that would work, How
about we get the government out of setting wages and we get the government to say, all right, here's $1 trillion worth of regulations we could just get rid of today, and nobody's going to be any the worse. And let's work on expanding the pie. On the other hand, you go to a place like China, and you see what complete absence of rule of law and regulation, what havoc it wreaks. During the flooding this year, they had massive floods, like 100-year floods all over the place. And what they found was that the Chinese government was actually speeding up the discharge from the dams at night when nobody knew about it, because if they actually discharged during the day and people saw it, they had to pay compensation. But by discharging at night, even though it flooded people out the same way, they got away with it. They didn't have to pay. So we don't want to go regulatory free. That's just not, that's a recipe for real disaster. Magnifies natural disasters and man-made disasters. Somewhere in the middle, it's got to be a happy medium. I don't know what it is, but the government, the regulators don't even look for it. And I think that's really the problem. But we have
simple is better, I guess, to them. So,
but we have.
I think we solved those problems, Kerry. That's a really productive 10 minutes.
We certainly shed some light on them. I don't know about solving. We are into solutions, but when it comes to the government,
above our pay grade.
I kind of go with Jefferson. The government that governs best is that which governs least.
Least.
So that must mean we have the worst government in the history of the country.
Well, with Gen Zs and millennials electing more and more people from their generations and so forth and mindset, Pew Research has shown repeatedly over the last few years that members of those generations are much more of the mind that government should be doing more to solve problems. And to some extent, I understand it, because if you're a younger person and you're looking at the divisiveness, the dysfunction that you and I just kind of talked about, where you see problems and yet nothing gets changed, or the changes aren't really, very effective, I think it's natural for them to think, okay, the government should be doing more to address the problems. And that's what is going to happen. I mean, whether us older folks agree with it, think it's a good idea or not, the reality that is what's, in my opinion, what's coming. And, I think knowing that, accepting that, is maybe somewhat helpful, because there will be ramifications at some point in time in the financial markets. So I'd rather not have an opinion per se, but I'd be an observer and trying to observe when some of these things will either be beneficial, like, for instance, the spending plan that they're talking about passing, and the Democrats very well may ram it through. Well, if they send out, X number of dollars to a bunch of people who are working, whose income have not been affected, but have been trading the market by buying call options on big stocks and so forth, guess what? When those monies go out, there's going to be another big rally in the stock market, because they're going to buy call options. The dealers are going to be forced to buy the stock. So we're seeing, the ramification of some of the decisions and the money being sent out in Congress, not so much having as much impact on the economy as they would hope, but certainly having an impact on equity markets. And I think that's going to continue, especially if this additional money is passed in the amounts that they're talking about. So that's why I think one of the reasons why I think the S&P, again, my take is I think we're going to see a correction. The technical underpinnings of the market the last 2-3 weeks have been slowly but surely weakening. I think there's a drop to 3,600 to maybe 3,500 coming. But then, Kerry, I think the S&P is going to make a move above 4,000. And, Congress sending out a whole bunch of money to people so they can buy call options would be part of that equation.
Thanks to easy money from Congress, we'll see
more speculation.
All right.
Yes.
Well, I think we'll leave it at that. Just tell people how they subscribe to your publication.
Yeah, go to macrotides.com and all the information is there. There's a bunch of wealth of information you can review. And the one last thing I want to, if I can, Kerry, touch on, because I think it's important, is, the dollar has been declining since March of last year, and short positions have built up on the dollar. But of note, last week, one of the European governing council members, the head guy of the Dutch central bank, made some comments that further appreciation in the euro was really unwanted, because it would make it more difficult for the ECB to get to their inflation target of 2%. And the reason why this is important is the euro is 57% of the dollar index. So as you noted out earlier, a lot of times rallies start with short covering. And I think potentially that's what we're looking at in the dollar. A lot of shorts. And, this might be the spark that gets things going. I suspect we'll see additional comments from members of the ECB in coming weeks, because their economy is weaker than ours. The vaccination progress, we're at over 7%. They're at 2%. And so they're trying to pull levers to stimulate their economy. One of them would be cheapening the euro. And I think that's what's coming. And that implies that we're going to see a rally in coming months in the dollar index, which will have some ramifications for various, financial markets. So thank you for letting me put that in. But I really do think that was very noteworthy, last week. So, all right. Thanks so much, Kerry.
Hey, all of you out there, send us your emails, kl@kerrylutz.com, Twitter feeds @KerryLutz. Sign up for the free newsletter at financialsurvivalnetwork.com. Jim, we'll talk to you again real soon.
All right. Take care and stay healthy.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.